I'm Millie Askew, and I'm just going to give you a brief update of what's been going on in the markets over the last few weeks. So the AHDB Winter Planting Survey released last week revealed total cereals and oilseeds planted in England as at the 1st of December at 2.6 million hectares. So this is the lowest acreage planted to winter crops in 3 years. Yet it is historically low. Over the last 16 years, there have actually been 6 previous years with lower acreage planted to winter crops, and that includes 3 years ago, and that was due to poor autumn planting conditions. However, this year the autumn planting conditions were quite good, and it's thought to be actually due to economic and agronomic reasons. So if we realise a total planting area this year of similar to last year of 3.2 million hectares, this leaves us 565,000 hectares planted to spring crops. And if that is actually realised, that would be the largest level planted to spring crops in over 16 years. The HMRC trade data released last week showed that January exports of wheat were the highest monthly exports since December 2011 at 310,000 tonnes. This brings cumulative year-to-date exports up to 1.3 million tonnes, which is, compared to last season, it's 21% ahead of the pace. The boost in exports in January actually may not have come as a large surprise to some people, with the sterling dropping to low levels against the euro since the beginning of the year, making UK wheat more export competitive. However, it is feared that the boost may have come a little bit too late, because to reduce or to prevent the surplus getting any bigger than last year, then we're going to have to export 350,000 tonnes for the next 5 months of the season. The last time actually this was achieved was the last time 5 consecutive months of circa 350,000 tonnes was achieved was back in 2008-2009 season. So then if we look now at the carry, which we've spoken about quite a few times before, but it's actually reached the largest level on these contracts and is the highest level we've seen in a number of years. From harvest this season, the carry between the old crop and new crop, so that's the May 16 futures contracts and the November 16 futures contract, has widened by over £10. And it's now actually currently residing at just over £14 per tonne, and that's as at yesterday's close. With the premium the way it's actually standing at the moment, it's increasing the incentive to carry the 2015 crop over and beyond harvest 2016. But from a grain marketing perspective, however, you need sufficient storage space and cash flow to do so. And now if we look actually at a global level, so the USDA released its latest WASDE last week, which is World Supply and Demand estimates. In those estimates, they reduced their global stocks forecasts for this season. A decrease in output from Australia and India actually outweighed a slight increase in EU production. But despite the reduction from the previous forecasts, we're still looking at a record level of ending stocks for wheat, and it's actually going to be 23 million tonnes higher than this time last season. Similarly, maize and soybean stocks were also revised down, but yet, like wheat stocks, they are still at record levels, and it's signifying little change to global market fundamentals for both grains and oilseeds.